Silver is the most underrated tradable metal in American markets, more volatile than gold, more accessible than platinum, and most traders ignore it completely. In this video, every term you need to trade silver CFDs on the top US platforms. Silver trades as XAG USD, ounces of silver against the US dollar. The spot price updates every second. Unlike gold, silver is highly sensitive to industrial demand. Solar panels, electronics, medical devices all consume silver, making its price move faster and wider. A silver CFD lets you trade the price movement without owning physical silver. With 110 leverage on most US platforms, $1,000 controls $10,000 in silver. The smaller margin requirement makes silver CFDs attractive for smaller accounts compared to gold. Silver is 3 to 4 times more volatile than gold. That means your margin gets consumed faster. A 5% move in silver is normal in a single session. Always set your margin buffer at least 30% above the minimum requirement, or you risk automatic liquidation. Because silver moves fast, stop losses must be wider than gold. A tight 0.5% stop on silver will get triggered by normal price noise. Professional silver traders use ATR, average true range, to set stop loss distance. Set take profit at minimum 2x your stop loss distance. Silver drops faster than it rises. In bear markets, shorting silver CFDs can be more profitable than any other metal. On US platforms like Interactive Brokers and TD Ameritrade, shorting silver CFDs is as simple as clicking sell. No borrowing required with CFDs. Silver spreads are wider than gold, typically $0.05 to $0.15 per ounce. In thin market hours like Asian Session Open, spreads can jump to $0.30. Always check the spread before entering. Trade silver during New York and London overlap for tightest spreads. Three platforms stand out for silver CFDs in the US. TD Ameritrade Thinkorswim offers the best silver chart tools. Interactive Brokers has the lowest commissions for high-volume silver traders. tastytrade specializes in silver options and futures alongside CFDs. Professional traders watch the gold-silver ratio. How many ounces of silver equal 1 ounce of gold? When this ratio exceeds 80, silver is historically cheap versus gold. When it falls below 50, silver is expensive. This ratio tells you when to switch between trading the two metals. You now know EXAG, USD, silver CFD mechanics, volatility risk, ATR-based stop-loss, shorting silver, spread timing, top US platforms, and the gold-silver ratio. Subscribe for the complete metals CFD series, platinum and copper next.